we all are afraid of income tax notices. We do not want income tax to give us notices and scrutinize our records. Now, there are certain high value transactions which you undertake might lead to an income tax notice. What are these high value transactions? There are certain financial institutions like banks, authorized dealers, mutual funds. They are supposed to file an SFT return with the income tax department, which gives the details of certain high value transactions conducted by the investors or the concerned persons. So let us discuss each one of them one by one. Number one is the term deposit. If you make a term deposit in a bank for an amount exceeding 10 lakh of rupees, then these transactions, this term deposit is reported by the bank to the income tax department through the SFT return. And you may get a notice from the income tax department if you have made such a term deposit. Number two is credit card payments. We all use credit cards nowadays, and in the credit cards, whenever you get a bill, you have to settle it, and you may settle it with cash or with online transactions. So if you settle the credit card bill through cash of amount exceeding 1 lakh in a particular year, in a financial year, then these transactions are reported by the credit card agency to the income tax department. Similarly, if you settle the credit card bills for an amount exceeding rupees 10 lakhs in a particular financial year, then these transactions, these payments are also reported by the credit card agency to the income tax department. Number three is the purchase of immovable property. When you buy an immovable property or sell an immovable property for an amount exceeding rupees 30 lakhs, then these transactions, this sale or purchase is reported by the sub-registrar office to the income tax department. So you have to make sure that all the transactions related to the sale or purchase of property are reported properly in the income tax return. Number three is the bank accounts. Now, we have savings account in a bank, and if you are doing a business, then you have a current account. If you deposit cash for an amount exceeding rupees 10 lakhs in a particular financial year in a savings bank account, then these transactions are reported to the income tax department. Similarly, if you deposit 50 lakh rupees or more in a current account, then these current accounts are also reported to the income tax department. Next comes the foreign exchange. If you buy foreign exchange from an authorized dealer for an amount exceeding rupees 10 lakhs, whether it be through traveler's checks or it could be through the foreign cards, then again these transactions are reported to the income tax department by the authorized dealer. Next is the investment instruments. If you purchase investments, if you buy securities, shares, mutual funds, bonds in an institution, in a company for an amount exceeding rupees 10 lakhs, then again these investment instruments details, the details of the buyer are reported to the income tax department. Now, when you see these transactions reported in your 26AS during the filing of the return, income tax return, then you should make sure that all these transactions which are reported in the 26S are correctly filled in your income tax return, which will reduce the likelihood of getting a notice from the income tax department. I hope that this video proves useful to you and you are able to utilize it to the maximum advantage. Goodbye for now, and thanks a lot for watching.